I'm joined by Ifeoma Onyejekwe, the fixed income trader at UBA, and she joins me today to discuss the markets. Thank you so much for your time, Ifeoma. I'd like to understand first, we understand that there was a bond auction today. I would like you to get to know if we've seen any, your expectations from that.
For having me. So this week, though the fixed income market has largely been calm, dealers are all expectant concerning the DMO bond auction today, where 60 billion naira across the 2023, 2030, and 2050 bonds are to be offered, broken down into 20 billion naira each. Traders eagerly expect to be guided going forward, depending on the level of stop rates today. For the trading sessions this week, we've seen expanded yields at the head and tail of the curve, showing the uncertainty prevailing in the market. The 2023 bond traded at high 8% levels, so we expect the stop rate on that bond to be around that level, just a little below the previous stop rate of 9%, while the 2030 bond and the 2050 bond will likely have stop rates to be between 11.85 to 12% and 12.5 to 12.75% respectively. In the treasury bill space, scarcity of OMO bills and very unattractive rates resulted in stalled activities as observed this week. Scarcity of OMO bills being that the last time the central bank made a full sale on all maturities being offered, that is the short, medium, and long tenor bills, that was on the 23rd of April. Last week, no sales were made at the OMO auction, and only 100 million naira was made at the previous OMO auction before that, which was on the 30th of April. However, market expects the Apex banks to conduct an OMO auction tomorrow in order to mop up liquidity. As system liquidity balance this week has been very healthy, resulting from fast allocation payments of about 300 billion naira. System liquidity balance today stands at 497.32 naira. Additional inflow of liquidity of 344.71 billion from treasury bills maturity tomorrow also serves as reason for an OMO auction to take place. However, stock rates are not expected to be on the high side as market participants, on account of the availability of few investment channels, would likely bid aggressively at the expected OMO auction tomorrow. We expect activity in the treasury bills market to likely remain muted, that's in secondary markets, if no improvement in the yields is observed, while market traders cherry-pick rates at a break-even or profitable position relative to their cost of funds in order to mitigate losses.
All right, but what would you make of the central bank's FX management strategies going forward, and also when you look at the reserves and how they're playing out?
Okay. The central bank, in carrying out its mandate of assurance that the bank would meet the legitimate FX needs, resumed wholesale FX intervention this week, selling to some commercial banks, and with our foreign reserves being on the rise, currently at $34.87 billion, and closing rates across the FX market segments being unchanged. The IRNE rates are 386.33 and CBN SMIS rates are 280.69. I believe that the central bank is well equipped to meet legitimate FX demand.
All right, but let's also try and understand what the liquidity story has been as well. I understand that some maturities are expected tomorrow. We also saw some FAC credit as well coming to the markets. How's that playing out with the liquidity story?
Sorry, could you repeat that question?
Yeah, I'm trying to understand the liquidity story in the markets now. I understand that we're expecting some maturities tomorrow, and also we've had some FAC inflows coming already in the week already.
Yeah, so like I said before, the system has had a very healthy liquidity balance, and due to unattractive rates in the market, we've not seen much demand across the treasury bills or almost section, even in money market rates. However, this liquidity has its funding pressures. However, because we expect rates to be on the low side, pending when liquidity depletes following the debit from the DMO bond auction today.
All right, but going into next week, we understand that, we're expecting some figures to come out from the inflation as well, and also there's an MPC meeting next week. I'd like to get what your assessment is for what to expect.
Could you repeat that, sir? I can't hear you.
Yeah, so looking into next week, we're expecting inflation figures to be out for April, and as well the MPC meeting is going to play out as well next week. I just want to get what your expectations are for inflation and the MPC.
Well, But because of the COVID-19 pandemic and also border closures, expected inflation is to be around 12.4, owing to increase in food costs. And we expect the MPC to hold rate stable at 13.5, as there has been no reason to move rates either upwards